topic. Contract costing and operating costing are both methods of cost accounting used in different types of industries and for different purpose. Here is a view of each. First of all, we will discuss about contract costing. Contract costing, also known as job costing, is a system used to track costs associated with specific contracts or projects. This method is commonly used in industries where work is done according to customer specifications, such as construction, shipbuilding, and engineering. We can say contract costing is a part of a specific order costing method where work is performed as per requirement or specification of the customer or contracting. In fact, contract costing is the method of costing which is applied in those organizations where contracts of non-repetitive nature is taken. Contract is a work of job of large size which continues in one or more than one accounting year. Here, hence, separate contract account is prepared for each contract. The main object of contract costing is to determine the total cost of the contract, to determine the profit or loss on each individual contract. The terms of contract regarding work to be undertaken, period in which to be completed, value of the contract, advances to be made by the contractor to the contractee on the certification of architect, compensation payable by the contractor for the breach of contract are decided upon between the two parties before the work is started. Contract costing is a type of specific order costing which is undertaken where the work is performed as per the requirement of specifications of the customer or a contract. Now, there are certain terms and conditions which need to be decided before the work of contract is undertaken, like period in which the work to be completed, and advances to be made to the contractor on the basis of work certified by the architect, compensation payable by the contractor for the breach of contract. These contracts are related to the work of constructions of roads, buildings, bridges, dams, and banks, etc. Next is what are key features. Individual project. Each contract or project is treated as a unique cost. Means the work on contract is performed at a contract site which is separate from the work or a place of a contractor. So each contract and or a project has certain cost associated with that. Cost tracking, costs are tracked for each contract, including direct material, direct labor, and direct expenses. We know there are three elements of material are involved for any kind of cost. The material, labor, and expenses, and costs are tracked for each type of material when we are preparing the contract costing. Revenue recognition. Revenue and cost are recognized based on the stage of completion of the product of the contract. Each contract is supposed to generate certain revenue, and this revenue has to be analyzed in relation to cost at each and every stage of the completion of the contract. Completion durations. Contracts may be extended over several accounting periods, requiring the allocation of cost and revenue over time. Cost control helps in monitoring and controlling costs for specific contracts. Contract is completed as per the instructions of a contractee, and due consideration is given to the instructions, size, color, structure, design as desired by the contractee. This is one of the again additional features which we have not mentioned in case of contract costing. The contractor is paid in installments, which is done after the work has been completed or certified. The work is certified by the architect, engineer, expert, or any other valuer. Now, when we say that contract costing, the work is done as per certain order. Now there are maybe question arising, then what is the difference between job costing and contract costing? Because job costing is also same there where the work is done against a specific order. So we can say in case, so here are certain differences between job costing and contract costing. Nature of work, small scale, short term jobs. In case of job costing, the nature of work is very small, and but in contract costing, there are large and long term contracts. In it, the cost units are individual jobs or batches, but in case of contract costing, cost units are individual contracts or projects. Duration of job costing is short, day to months, and duration of contract costing is months to years. Industry application, printing, customer manufacturing, repairs, etc. But in case of contract costing, it is construction, engineers, shipbuilding. Cost tracking, detailed tracking for each job and detailed tracking for each contract is done. Revenue recognition is basically in case of job costing is recognized when full job is complete. But in case of contract costing, revenue is recognized upon the stage of a completion of a contract. Cost control, granular control over individual jobs, control over long-term contracts. Work in progress typically is not significant in case of job costing, but contract costing, work in progress holds a great significance. Documentation, job cards, job sheets, contract progress reports, etc. These are all parts of your contract costing. And in case of job costing, documentations include job cards, job sheets, etc. This is a format of contract account where debit side materials are given and the credit side again materials are mentioned, but there is a difference in the nature of the material being shown at the debit side and material shown at the credit side. In case of debit side, you can see direct purchases issued from stores, transfer from other accounts. These are all part of your contract accounting on debit side. First is issue from stores. Issue from stores are the materials which have been issued from stores, or they can be you can purchase them directly from the market. All such materials which are not available with the storekeeper but are required for the contract are purchased directly from the market. Next is transfer from other contracts. When there are more than one contract simultaneously being continued, then some material not being used in any contract can be transferred to other contract. Material supplied. Next is we talked about direct materials. In direct material, we also have material supplied, which is, I think, not mentioned in the question. But if there are any material supplied by the contractee, sometimes the contract may supply certain materials from his own stock for use in the work. Such materials are not debited to the contract account but shown in a separate memorandum record outside the accounts. Next is direct labor. Direct labor, generally it is a cost of labor working at a specific contract site and but where several contracts are executed side by side in the same period, job cards are also maintained with the time cards. The outstanding wages at the end of the accounting period should be added to wages if any are there. Next is direct expenses. These are also part of debit side of this contract cost. The expenses incurred exclusively for a particular contract are treated as direct expenses and are chargeable to that contract for which incurred. For example, a plant hired for a special contract will be charged by the higher charges or fees paid to the expert for consulting him as regard to a specific contract will be treated as direct expense. Next is indirect expenses. Indirect expenses incurred commonly on two or more contracts are called overheads. These overheads are allocated or apportioned to the contracts on an appropriate basis. These overheads are generally distributed and debited to contract account on the basis of direct pages or material consumed or any other basis. The examples of overheads are salaries of manager, architects, supervisors, store expenses, including the salary of a storekeeper, administration and overhead expenses, which we have very well understood when we were preparing the cost sheet. Next is plant and machinery. Plant and machinery, the nature of contract being different, the contractor has to acquire various types of plants and machinery, equipments and tools. After this plant and machines, some plants and machines are acquired exclusively for use in a specific contract and are used for a longer period of time on such contract. On the other hand, some plants and machine may be used in various contracts for a shorter period of time simultaneously. Now, in this case, there are cost of a special plant and machine. What are these special plant and machine? For a specific contract, any plant purchased or issued from store which is to be used in certain contract for longer period of time, and there is a belief that these plants and machines will be exhausted during the duration of the contract. Then such cases, the contract account is debited with entire cost of that particular plant and machine in the beginning of the contract. Now, next is subcontract cost. What are subcontracts? A contractor may not be expert in all the trades or functions required in the completion of the contract. So he may appoint another contractor which is called to do certain specific jobs, and that person is called a subcontractor. For instance, in construction of a building, he may be given subcontracts at different parties for flooring, electric fittings, doors, and furniture, etc. So he may not be able to do this work himself. He may appoint another contractor to take responsibility of these kinds of work, like as I have talked about flooring, electric fittings, doors, and furnitures and fittings. The contract account is debited with subcontract cost. The subcontract cost is one which has been paid to the subcontractor for doing the specific job. Now comes the credit side. In credit side, we have materials. The credit side of contract account, following items related to material are shown. Material returned to supplier. If excess material was purchased from the supplier and now it is not being used in the contract further, then such materials may be returned to the supplier. The contract account will be debited by the amount of material returned to the supplier. Material required return to store. The materials returned account is debited and contract account is credited with the amount of such material as are returned by the contract to the storeroom. The material which is not being used, either we have discussed it can be returned to the supplier or it can be returned to the stores which was returned in between the contract or on completion of the contract. Next is material transferred. Sometimes the contract account is credited with the amount of material transferred by the contract to the other contract by debiting transferring contract account. So the entry by material transfer to appears on the credit side of the contract account. Now, next is on the contract being completed. If the contract has been completed, then remaining material is sent back to the storeroom and contract account is credited by the value returned and material account is debited. In this way, the material account is closed. While returning the material to store, material note should be prepared in that particular case. If the contract is incomplete, if the contract is incomplete, like as if say in case of incomplete contract, if the contract is incomplete, even then the profit or loss on contract has to be determined at the end of the accounting period. In this situation, contract account is credited by the value of material, but material account is not debited because The material are not being returned to the store for the material account is being closed. Here in place of material account, material at site account is debited by value of material. In the next year, in the beginning, a reverse entry is passed and material site account is closed. So these were the certain items which were shown in the credit side. Now there are also sale of materials. As you can see in the format, there is sold. So if the materials are sold at the contract side, the contract account is credited with sale value of materials, but the profit or loss made thereon is transferred to the profit and loss account because such a profit or loss is not incidental to the contract work. If there is profit on the sale, contract account is debited and P&L account is credited. In the event of loss, P&L account is debited and contract account is credited. Next is material being sold or destroyed. If the material on the contract are lost or destroyed by fire, contract account is credited and P&L account is debited with the cost of such loss. This is done because this loss is not a loss happening on contract, but it is an abnormal loss which is not treated as a part of a contract. So this is how we have done some theoretical aspects. These are the points we have already covered. Next is portion of notional profit or estimated profit to be transferred to P&L account. Sometimes there we take notional profit and we need notional profit in case the contract is incomplete and there is certain amount which of the work which need to be certified by the architect, and on the basis of that particular work certified the contractor is paid. The portion of national profit or estimated profit to be transferred to P&L account depends upon the stage of completion of the contract, that is ratio of work in progress certified to total contract work. For this purpose, work in progress uncertified is not correct considered. Means whatever work is certified, that is considered, and the work is not certified, it is not considered to be transferred to P&L account. Prudence requires that total notional profit should not be transferred to P&L account, but a portion of it should be withheld as a reserve to meet any unforeseen future expenses or contingencies. When a work progress certified is less than 1 by 4 of the contract price, no profit is transferred to P&L account. This is based on the principle that no profit should be taken account until the contract has reasonable advance. We see that 1 by 4 of the contract price as not, we don't see it as a progress in contract. In a contract completion, we just see it as a part of contract completion. So whenever there is a work certified which is less than 1 by 4 of the contract price, then no profit should be taken into account unless the contract has been reasonably advanced. When a work in progress certified is 1 by 4 or more but less than half of the contract price, then generally 1 by 3 of the profit is transferred to P&L account. The balance amount is treated as reserve. Thus, profit transferred to P&L account is computed using the formula notional profit into 1 by 3 into cash received work certified. Next is when work certified is half or more but less than 9 by 10 of the contract price, then transfer to P&L account is equal to notional profit into 2 by 3 into cash received upon work certified. So this was all theoretical aspects we covered regarding the contract costing. Now, what are numerical aspects? In this particular question, we have to first understand the treatment of material in contract costing. It is a very basic numerical. The contract price of a contract undertaken by Mr. Ahirwan on 1st January 2022 was rupees 2,50,000. Following expenses were incurred on the contract. Material consumed 62,500. Material on hand 30 September 2022. 20,000. Wages are 30,000. Direct expenses are 32,000. Plant purchase is 40,000. The contract was completed on 30 September 22 and the contract price was duly received. Provide depreciation of plant at the rate of 10% and charge indirect expenses at 20% pages. Prepare a contract account and contractees account in books of contractor. Now, contract account, first of all, amount, date, particular amount. This is your debit side and this is your credit side. Now let's start first. First 10, 22 to 39, 22. Particulars are to material purchased. To material purchased. First is consumed 62,500. Next is closing stock 20,000. Now we will add on these values and show in the outer column. It is 82,500. Next is two wages. Two, two wages. Two wages, 30,000. Next is two direct expenses. Two direct expenses. Two direct expenses are 32,000. Next is two plant issued. Two plant issued. Plant issued is 40,000. Now, two indirect expenses. Two indirect expenses. Indirect expenses are 20% of wages. Twenty percent of wages. It is 6,000. Now, this is for your debit side. Next is your credit side. First of all, date will be 39/2010 as it is a closing date to 2022. We will record by material at side. By material at site. We are having by plant at site. By plant at site. Cost 40,000. Next is less depreciation. It will give you 4,000 and material at site we are given the value of 20,000. We will add these values, adjust these values, we will get 36,000 in the outer column. And finally, the by contractive price which has been mentioned which is mentioned as 2,50,000. 2,50,000. Now we will add all these values and we will get 3,06,000. 3,06,000. Now after this 3,06,000 we will note over here so that our performer looks complete. 3,06,000. I think it's not 3,06,000. No problem. We will delete it. 3,06,000. Now we will adjust these figures out from 3,06,000. We will subtract all these values. Then we will arrive at a profit and loss account. Profit and loss account, which is 1,15,500. So you can see this is a contract account. Contract account. Let me take this value and paste it over here. Contract account for the period ending 30th September 2022. Now we can assume, in order to understand it more clearly, we have to prepare contract account on the basis of expenses given. And on the basis of expenses given, we will prepare the format, date particular amount, date particular amount. This is a debit side, this is a credit side. Material purchased, wages, direct expenses, plant issues, indirect expenses, which are 20% of wages, are all recorded in your debit side. Material at side, which is 20,000 given in the question, and plant at site cost was 40,000 and depreciation was to be charged at 10%. So 10% of 40,000 will give you 4,000 value. So depreciation is charged at 36,000. The contractee's account was value of contractee account was 2,50,000. Now we will add on all these values, and from these values we will get the figure of 3,06,000, and from 3,06,000 we will deduct all these values, and finally we will get the profit of 1,15,000. This was all contract account, and we need to prepare contractee account as well. Contractee account simply means a person who is carrying on the completing the contract is a contractor, and person who has given the contract is known as contracting. Now 3922, this was your account. To contract account, we have 2,50,000, and again, sorry, I forgot to copy the above format. No problem. We will paste like this. And for credit side, it's a form of a ledger we usually prepare, because then all amount given by the contractor is transferred to bank account, and we will mention it by mentioning by bank account. Bank account is 2,50,000 again. So this was all about. We will copy in order to complete the format of a ledger. Again, we will copy and we will paste it over here. And to give it more clarity, you can make borders in these. So this is all about your contract account. In contract account, we usually prepare contract account and contractee account side by side. Value which has been transferred by contractee to the contractor is 2,50,000. As you can see, the contract price of a contract by Mr. Ahirban was 2,50,000. So this 2,50,000 is the amount given by contractee. That's why we have taken 2,50,000 over here for the purpose of making a ledger for contractee account. First of all, there are certain points which need to be considered or kept in mind while you are preparing a contract account. I would like to speak about them. First of